What is going on, everybody? Welcome back to another video. In this video we are going to go over what two stocks I love to trade and invest in and sell options in when the market's in a more volatile environment and a little bit more scary, crazy kind of an area. So with that being said, I want to jump right into this video and get you right into those stocks.
I know I'm fine, but the money
Okay,
makes
guys, so two stocks, and this one is going to be a big thing. These are not going to be ETFs. We could add ETFs into this if we wanted to. I don't want to because I know a lot of people are not trying to spend, or they don't want to be in stocks that cost hundreds and hundreds of dollars when they're doing this. And so I wanted to make it something that's all these stocks are under $100, and there's really two of them, and they're very well maintained stocks. They have great earnings, they have great utility, they're well known brands, and they're not going to bring you a 20% return every year more than likely, but you can get yourself a consistent 10% return a year, and maybe a little bit more depending on how the strategy ends up going for you over the year. And I'll explain what I'm saying at here in just a second. So the two stocks, I'm going to give them to you right up front so you don't have to wait. I get it. So they are KO and SO. So one of them you're going to absolutely know. The other one, more than likely, you guys aren't going to know unless you are in the southern states. So what I mean here, we are going to start out with the one that most of you guys aren't going to know. It's a little bit more expensive because I'm going to explain what the difference is here and why I like this company. So this is a utility company that provide power. I used to have them as well. You pay them every single month and you keep your utilities on. You keep your electricity going. There's nothing wrong with this. It's a great business. There's another one called Duke Energy, which I know some of you guys in the Midwest probably know this one. This one is under $100, so but just barely, so I didn't really want to put it in here. But if you guys want to, you guys are welcome to do the same strategy on here. It almost mimics SO, except for it's a little bit cheaper. They have slightly better earnings. But I like Southern Company. I like the price point on them, so that's kind of where we're at with that. So the main thing is I don't ever buy stock just to buy it. I'm always selling an option in order to buy my stock. That's how I create extra income off of it. So the one thing I do on these, and especially in these environments, guys, and I want to make that clear here in this video, is in these environments, you are okay with going and selling options on stocks that aren't super volatile. So like Google, Amazon, those stocks are low. Tesla is absolutely crazy still. I don't touch those in these environments where I think that we could have an interest rate change, but I think the Fed is still wanting to stay higher than what everybody else is wanting it to be, to combat inflation. So like on these, and a lot of times I will do this, I will just go out here and I will go actually, in some of these I will do weeklies, but a lot of times I will go out here to these 44 to 3 or 40 to 30 days, somewhere around in there. And I'm going to get out on here. And so the reason why I do this, and I want to make this very clear, is you can see, it's moving, about $10 on a dramatic thing. Now that could equate to $1,000. I get that if you have 100 shares. I 100% get that. But we're going to minimize, instantly off of it. So I'm going to go out here and I'm going to sell, I think I sold a 66 on Friday, which collects me $70. I'm lying. I know which one I did. I'm looking at it right here. It is a 65 is what I did. And I collected $50 off of this. I think I actually collected slightly a little bit more, but that's neither here nor there. But I'm collecting the $50 right up front. So worst case scenario, I collected $50 off of my $6,000 this month. Now, what I will do when everything gets a little bit more sketchier, which I do think everything is coming up here, I will go out here to a $5 one or a $10 one. If it's $68.95 in a week, you guys can see this does move a couple dollars, but in a week it's only a couple of dollars. And I do believe, and again, the main thing on the wheel strategy, guys, is you guys have to be in good companies that you believe in long term. So when you do get put the option and you have to own the stock, you're not scared of owning it. That is a huge portion of this strategy, and then start selling covered calls on it. And So again, Southern Company has done great for years and years and years. They've done some stock splits, and you've just gotten more and more shares, and it's been fantastic. Honestly, I like Southern Company. It's been a great holding for me, a great utility. But I will go out here and if I'm looking at doing these on the weeklies, I'm selling the one right at it because again, I believe in this, and I only sell. We did this in another video, but we sell on red days. Now, Friday was more red than what it shows. It came all the way down here to this low point, and I was selling it right over in here. Again, it doesn't make that big of a difference on this stock, but I was selling it when it was red. So we're going to move back over here into this. So I collected, I think, yeah, but I went out on this one. So this is what I would be doing here. On this one, I would be going for the 20. I'm okay with buying it. 100% okay with buying it, because if we do end up owning this at $68, here is the big thing. You can go out to a 68 or a 69, say you want to make another $100, and you can sell it for $55 a week, guys. This is the thing. Say you're collecting $40 a week. We'll cut a portion of it off. This is still a good trade to be in consistently, and you can just keep doing this over and over and over. And if you guys actually get called the stock and it continues to uptrend, you're going to make more money than what your average is if you just sat there and sold puts on these. So you can get that one on there. I truly believe in this. I will maybe put some money allocation to some, as I think money's going to rotate into utilities if things start getting bad, and Southern Company will get hit a little bit, but I think it'll also do better than what other people are expecting. So that's what I'm seeing with this one. So we're going to do the same exact strategy, but we're going to do it on Coca-Cola. Why do we do this on Coca-Cola? Because even during depressions, guys, and basically when the market falls, I don't want to call it any names or anything like that, but a recession, people are still going to buy Coca-Cola products. They are. I mean, I still buy Coca-Cola products all the time. I'm not a big pop drinker or anything, but if I'm going to have an adult beverage, I drink it with a Coca-Cola. I don't drink it with Pepsi. I drink it with Coca-Cola. They're very brand loyal people, just like me, and it's going to do well over the case of time. They've already proven this, and they buy companies that are a threat to them. So I think Coca-Cola is going to be a fantastic. And this one's cheaper for you. It's almost $60 still, but it is going to be cheaper. And to get started, again, if you want to own this thing pretty fast, you can collect $10 on it your first week. Instantly. You just collect it. Or you can go out, and again, you guys know I like to do this. You can go out here and collect it. You're not going to get as much of a return as if you were doing it on the S&P or something. Sorry, guys. If you're doing it on the S&P, but you're still going to get a good little chunk of money here without having to worry about, oh my God, is the market falling? And if it does, I'm instantly out. What is it? $300 only on this one. So you're okay. And then you can start wheel strategizing it as well, meaning selling covered calls once you get put to it. So there is always a way out of a trade, guys. And again, I like to see both sides of this thing. So you can do it monthly selling calls. You're going to collect about $100. That's what I would say. I'd say probably about $100. And again, I underestimate. So when it does go over, I'm even happier. When I'm selling covered calls and I collect more credit than what I even expected, it's an even better day for me. And then on the selling the calls on the 5 days, you're still collecting $30 if you're doing it the one right at the money. Or this is where it does get a little trickier for you, and this is where some of you guys are going to have to do this. If you do get called to it and the stock continues to downtrend, you may have to come out here 33 days and collect $30 to $50 and be able to do it. But again, it's a low volatile stock, guys, and that's kind of what you are looking for when it comes down to being in a recession or the market completely downtrending. I want to be in companies that are really solid names, solid companies, have plenty of cash, and they're able to move, and they're not going to fail during a recession. So thank you guys for watching this video. Hit the thumbs up button. I really support or I really like all the support you guys have been giving me here lately. Comment below, you know, anything that you guys want. I make these videos very, very raw. I don't do a ton of editing. I don't want to make it seem like something that it's not. Thank you guys. See you guys in the next one.